Hello everyone, welcome to BS Satoshi, and I am your host. Really excited to meet you all up in another video, and today is the 3rd of November 2021. So the title of the video might be a bit more scary for some people and a bit more curious to other. And before we dig deep into the video, as always, please like my videos and leave your comments and subscribe to my channel. And if you can also leave your notification bell on, because the content are time sensitive. So yep, that's it. Self explanatory. Right. So the inflation part of things. So what is inflation? Why is it so serious? And what is it going to do to people's day-to-day life, like people like you and me? So inflation is where the monetary debasement, I would say. Even nowadays, the developed countries like US and UK and European countries even have inflation targets around 2 to 3%. It's very strange for me sometimes to understand because, economically, it's a very deeper hole to discuss. But the economists always say developing economies and grown economies need inflation because the demand is going up. That means it's a good thing, right? Okay, so inflation can be created in so many different ways, either by a steady supply of services but a growing demand for them. That means the same money trying to buy fewer resources. So if the supply doesn't stand up to the demand, then the prices will go up. That's inflation. But then there's another side of inflation that people usually don't realize, and they think, oh, okay, this is nothing to do with us. It is money printing. So as I always talk about and mentioned in my previous videos, the monetary inflation, the monetary debasement is a thing that we don't have any control over, even though all of our work and services are valued in it. So it doesn't have a strict economics in the sense it doesn't backed by anything. That's why I always said that currency is not equal to money, because currency is not backed by anything, doesn't have any intrinsic value. So rather than digging deeper into that part, let me carry on doing this. So the governments in the West calculate inflation called CPI and PPI. So consumer price index is the CPI. That's the one that usually is the major one. But then even I have some reservations about that, because CPIs are usually, how it calculated is they take a basket of things. Say, for example, some milk, egg, bread, and fuel, and you get the idea. There's 20 things or something on the basket, and then they take those items, average the price up compared to the last year same time, and then the percentage of increase is inflation. But the thing that people don't realize is they don't compare anything like house prices, house rent, real estate. These things are also very important to people day to day, because people don't live in the road. So it's very, very strange when they even manipulate the way they can calculate the inflation. So there's two ways these things just kind of like get out of control. Either the prices of goods go up, or your buying power goes down. They both result in the same thing. It's just that you can just buy less for what you have. So is it a great idea to hold money as or I shall say currency as a savings? It doesn't make any sense to me. It's my opinion. This is not financial advice. But someone called Michael Saylor, this is like the person who holds the largest Bitcoin reserve in a public company in US called MicroStrategies, and he is actually also the CEO of a publicly traded company for a very long time, like I think record long time. He's their CEO for more than 30 years now. So it seems like something he knows how to run his company, right? So what he was saying, Michael Saylor, was saying is that it's an analogy, they say. Keeping money in your backyard, say for example you have $1 million worth of money in your backyard and the inflation is around 5%, as the US government is saying at the moment. Every year they come and take 5% away and burn it. So by the end of the decade, you will probably have 40 to 50% of your money, or the currency's buying power is just gone, right? You have the same amount of money, but the buying power is gone. So is it great to have a hedge against inflation? Yes, it is, because it makes all the sense, right? But then the volatility comes in when you decide to invest on anything, like any assets, cryptocurrencies or share markets or gold or whatever. But if you see the gold didn't perform great against inflation, because the inflation actually kind of went up at least 5% according to the government figures, but the gold price has actually gone down in the past year. So it doesn't make any sense because market manipulation is out of control. So what is a great strategy to deal with these things? I would always say, the short-term inflation is something that you can deal with. The long-term inflation is the issue. So you always have to hedge against the long-term inflation by different, ways of keeping your portfolio. Bitcoin is a great hedge against inflation because in the last 10 years, since Bitcoin's inception, Bitcoin grew 30% year on year at least. But then, it's all even calculating the bear markets as well, because, on those bear markets, it had massive corrections. So 30% year on year in the next 10 years will take Bitcoin to around $500,000. But then, again, don't take my word for it. This is just like modeling, and no one can predict the future. Anything can go wrong. So this is not financial advice again. Or gold. But, the gold's past performance in the past couple of years is not great, even though I believe that gold has a place in a portfolio, because portfolio is supposed to be diversified. So anything that doesn't correlate between each other is a great thing. Even you can invest in equities. You have to do your own research, which companies you're going to invest in. But there's a lot of companies you can invest in that will actually increase your portfolio, because in the past few years, the tech companies did great. But is it a good time to invest in tech companies? I'm not going to say, because the S&P 500, the top 500 companies in the US, they are at record high at the moment, the total share, S&P 500 itself. So is it great to invest on something when it's on the all-time high? Is it not fear of missing out? Yeah, there's all kind of scenarios going on. But a great investor, what they do is they take risks. So I advocate people taking risk, because everything is risk in life. But you need to know the difference between risk and recklessness. You can take a calculated risk and you can literally make money out of it, and also you will get good at it. But then there will be always losses, because no one can do 100%, because if someone does, they will be unstoppable. It's impossible. It's like the long shot. Anyone can get wrecked. It's about like how you manage your risks and how you manage your portfolio. There's a lot of people made a lot of money by doing most of their bets okay. So their losing bets also will then protect against their winning bets. Vice versa, I should say. So just be aware of inflation, and if you're saving money, in the sense, if you're saving currency, and if you don't want to think about inflation, that's a very bad idea, I would say. So please do some research about how inflation happens, because the US government until 2008 had a circulating supply of around couple of $1 trillion, and now their debt to GDP is around almost touched 135%. Usually that's a collapse point, except for Japan it happened. Now it's down, but then they kept on printing money because they don't have enough money to meet their spending targets. So is it a good thing spending a lot of money? I'm not talking about that. That's politics. But is it printing money is good? Because then if you're by printing money, you are like devaluing the money that people have. So if someone is actually holding on to their money, that's a great, great misery to me. Why would they do that? But I'm not arguing against not holding any money whatsoever. In short term, you do have to have money or currency, I should say, for your day-to-day spending. But you have to do your research for like a long-term hedging against inflation, because that's the best way of protecting your buying power. So that way, assets will actually appreciate in value rather than depreciate, and protect you against the inflation risks in the future. Anyway, that's it for this video. Thank you for listening to my videos, and please leave your comments on the bottom of the videos, and let me know what you think about them. And also please subscribe and like to my channel. And until the next video, bye bye.